All right, well, welcome everybody to the Future Real Estate Millionaire Coaching Podcast. We have a very special guest today, Derrick Campbell. He's an experienced multifamily real estate investor. I'm sure you're going to get a lot of takeaways and value as usual. So, welcome, Derrick. How are you today, sir?
Hey, I'm doing good. Thanks for having me on.
My pleasure. My pleasure. Man. Yeah, listen, we're going to have a lot of fun on this podcast. Why don't you start us off by, introducing yourself and telling our audience a little bit about yourself, Derek?
Yeah, sure. I live out here on Vancouver Island.
Mhm.
I do not eat granola bars or wear Birkenstocks. I'm from Manitoba originally, so I'm
Yeah.
sort of an implant from the West Coast. Uh, so I moved out here with business. I owned a janitorial franchise for a number of years. Was how I sort of got out here. Yeah, I've been in business most of my life, been in real estate for many, many years, and I just enjoy the game. It's lots of fun. Now that we have the internet, we can connect with people. It's even more fun. I mean, when I first started out, it was, you had to go to these smoky rooms and have these, creepy, conversations with people. So it's a lot more fun now than it used to be.
That's true, isn't it? Yeah, yeah. Like you said, it's a digital age, right? You can
Yeah,
raise
yeah,
funds by doing a webinar or a meeting. You can meet people and do business online. It's insane.
yeah,
So
it sure is.
yeah. So with that, what do you think about AI? Like, what do you think that's gonna do? Where that's gonna take us?
I've been using it a little bit to do some research. Like when I look at markets and things like that I'm not 100% familiar with,
Hmm.
I've been using AI to sort of to I guess map digital models for me with respect to crime, growth, what are some future plans that the city or the area has. And so I've been using it sort of that way, and then from the social media piece, I've been using it sort of from a research perspective to
Right.
kind of do a little bit of a deep dive into some areas that are of interest to me and things like that. That's sort of how I've been playing with it. I read a thing the other day that said that AI was going to, impact the real estate industry. Not sure what that's going to look like, but who knows? I'm not a doomsdayer. I'm
Hmm.
tend to be more positive. I'm hoping that
That's good.
it's going to be a net positive for people as opposed to a negative, but we'll see, right? Who knows?
Yeah, absolutely. No, I agree. I'm not on the dooms day end of it either. And what's interesting though, I think you have to kind of, pick and choose, right? What you're thrown at.
Yeah.
Because I got the other day an email or Facebook something or other. An invitation actually was to a bot for as a real estate mentor. So now I can get a real estate AI mentor, which is insane. I didn't even open it. I'm like, you know what?
Wow.
I don't, I don't need a robot mentor. I need a real mentor who's been there, right? Who has the experience. But anyhow, it's yeah,
It's kind of ironical that something that doesn't even take up real estate is telling you how to buy real estate. That's kind of funny,
exactly,
eh?
exactly. So yeah, yeah, man. Listen, AI is gonna it's gonna change the world, though, man. It's just like the internet, right? In the
Yeah.
90s. So we'll
Yeah.
see where that takes us. All I can say is buy yourself an AI stock. Hopefully,
Yeah.
a big IPO. Don't go with one of
That's
these small caps.
that's right. Yeah. Yeah.
Although you never know, right? Amazon, Microsoft, they all started that way.
Yeah.
All
Yeah,
right. So,
for
Derek,
sure.
you mentioned you've got quite a bit of experience here with real estate. How long have you been investing in real estate?
I started in my early 20s. My background, I guess, is my father passed away when I was 12, and it sort of left our family in a bit of a bind. And so as soon as I was able, I started to do what I could to try and make money, right? So my dad left us like a $30,000 insurance policy, which even back then wasn't much. But I used it to buy a restaurant. My mom had a lot of experience in the restaurant industry. So I bought a restaurant when I was 16. I bought a convenience store about a year later. And one of the things that I learned sort of early on was that you have to rely on your employees if you really want to grow your business.
Hmm.
And that has always been difficult. And so one day I was just working in my convenience store, and there was a customer that came in, and he was a realtor. And so he and I were just talking about the world, and stuff like that. And
Yeah, yeah.
I was telling him, I was saying, I want to buy businesses, I want to do this. And he said, well, why don't you get into real estate? And I was like, yeah. And the funny thing is, I actually owned the building of the convenience store that we lived in, or that we had. So in a way,
Right,
I was already in real estate.
right, right.
And so he says, he gives me this, but he goes up to his card, he comes back, and he gives me this book called No Money Down for the 90s by Robert G. Allen. And he said, read this book. If you're interested, give me a call. So I
Hmm.
went home after I got off work, like 11 o'clock. I read it all night. I called him at about 6 o'clock the next morning, and I said, does this really work? And he
Right,
said, it
right.
really works.
Really?
And so I
Yeah.
said, okay, show me. And so that was my introduction to real estate. And so within the next 60 days,
Hmm.
we pulled down a triplex. It was a converted wartime house, but a triplex. We bought a duplex over by the university area, and we bought a single family house. And then we bought a nine unit residential complex and two commercial. And the fourth one, the 9 unit, I actually got cash back on the deal. And if you don't think that a 20-some-year-old kid gets addicted when you're able to do something like that and get
Yeah,
money back, it
yeah.
becomes a whole different game, right? And so that was my introduction to real estate. And I realized how you could scale the business
Mm-hmm.
without having to have a whole bunch of employees and all that
Right,
stuff. And
right,
so from
right.
a young age, I really saw how the reason why most millionaires are in real estate, because you don't have to have a team of 1,000 people to be able
That's
to
right.
build a
The
company.
scale. Yeah, yeah.
Exactly. Yeah. Yeah.
So you were 16 years old. That is insane that you got started that early.
Yeah, yeah, I was young. It wasn't like, oh, look at me, I'm great. It was that our life was pretty terrible after my dad died,
Right,
and we didn't I didn't have an option. I didn't know what to do. I just I did, my mom was in the restaurant industry for a lot of years, and so
right.
for me, I thought it made sense, right?
Yeah,
So it
yeah, yeah,
wasn't any heroic thing. It was a survival thing,
yeah, yeah,
truthfully.
yeah, yeah. Hey, listen, I've heard a lot of journeys like that. There's another guy who runs another Facebook group similar to mine.
Yeah,
And yeah, he was saying basically, he was in a survival mode, and that got him over the hump. Like, the
yeah,
hard time sometimes gets you to motivate yourself and push yourself, right?
yeah,
To do well. And it's interesting you mentioned the grocery stores. So lately I've been searching for businesses, right? Undervalued
yeah,
businesses that I can
yeah.
buy and then sell. Anyways,
Hmm.
groceries. I was checking out grocery stores, in Windsor, Ontario for sale. I had no idea that they're putting them up at like $50,000, $60,000.
Yeah.
Um, and I'm like, "Oh, wait a minute, aren't grocery stores like recession proof and always making money? I guess not, eh? A business is a business. You gotta you gotta run a business regardless, right? And be
Yeah,
successful at it or fail.
they're very capital intensive, right? Because you've got to carry all that inventory, and
Right.
even if you've got a 30-day note on your purchases,
Yeah.
depending on what it is, it doesn't necessarily turn in 30 days, right? And then
Right.
you've got, whether it's a rent or mortgage payment, you've got employees you've got to pay.
Yeah.
That's the difficult. One of the reasons why I got into the janitorial business really early
Hmm.
is because the metric on cash flow versus expenses is fixed. So you know what your profit is every month. So for example, let's say you clean a grocery store,
Hmm.
and you clean there for 4 hours a day, 7 days a week. And for that, the customer pays you $5,000 a month,
Yeah.
right?
Yeah.
So because of that, you know that you hire an employee
Yeah.
for 4 hours a day,
Yeah.
7 days a week.
Yeah.
So your expenses are 4,000, your profit is 5,000. You
Right.
make $1,000 a month on that. And
Correct.
that's such a different business model than many other things, restaurants,
Yeah.
grocery stores. because
Yeah.
you got to pay those people to be there,
Correct.
whether you've got bodies coming through the door or not, right? And
Right.
so that becomes a very different thing. So when your profit is fixed, it
Mhm.
really changes how you can run and operate your business, you know? And
Right.
that's why I've been in the janitorial business for 26 years.
Gotcha.
I like it. It's such a, for my mathematical brain, it's
Yeah. Yeah.
perfect.
Yeah.
It's
Yeah.
like
Yeah.
A plus B equals C. I
Yeah.
understand that, you know?
Exactly. Yeah. There you go. There you go.
Yeah.
Are you still in the janitorial business?
Yep.
Good. Good.
Yep.
No, no.
Yep.
I actually, you know, did a little bit of it. Uh, And yeah, I mean, it's an easy business to get into, to be honest with
Yep.
you. But yeah,
It is.
you still have to manage people and run people and that kind of stuff. So, but anyways,
Yep.
we're talking real estate. This is, the future real estate millionaire coaching podcast. So we're talking with Derrick Campbell here. He's got a lot of experience with multifamilies. So Derrick, tell us a little bit about, how you got into multifamilies. Did you get right into it, or where did you gradually go into it, starting with single families, or what happened there?
Yeah. So multifamily was my fourth deal in. It was when I bought the nineplex and two commercial.
Mhm.
And I had an old mentor. I used to, those two old guys that are the Muppets that sit up in the balcony on the Muppet Show. Yeah, I
Okay.
had these
Yeah.
two real estate guys that were like that. They were old and crotchety, but they
Okay.
knew everything about real estate. And so
Okay. Okay.
they
Yeah.
used to talk to me all the time. They used to, ask me questions,
Mhm.
they'd answer my questions and stuff like that. And
Mhm.
the guy owned 400 doors and two hotels, one of the guys. And I remember he said this to me, and I never forgot it. He said, managing one door is as difficult or as easy as managing 100 doors. So always manage 100 doors. And it stuck in my mind that when you're looking at building a business, you want to maximize the amount of time that you spend doing that, right?
Yep.
And so that was one of the things that really resonated with me. And so when we got into the fourth deal, I realized that I wasn't spending any more time with these 9 units than I was,
Right.
going and dealing with a single family, right?
Yes. Yes.
Yeah.
Exactly.
And so
Yes.
yeah, so that was a big eye opener for me.
Right.
And then when we sort of got down the road and I bought a few more multifamily,
Mhm.
the other thing was there was a couple things at the time. Doing condo conversions was a big thing. So
Okay.
people were buying multifamily and they were converting them to condos and selling them.
Okay.
And so one of the things that I saw was how you can structure certain projects to be able to maximize the profit. So one deal that I bought a fourplex, and they were four townhouses, and we stratified them, and I sold two of them, and I kept two, and the two that I sold
Mhm.
paid off the mortgage on the other two. So I had two free and clear ones. And
Right.
so I started to see the ways that multifamily could really elevate the way that you sort of do these deals.
Right.
And then the other side of it, when I got a little bit more into it, was I
Mhm.
started to see how, like, for example, let's say you take a 12 unit building, right? When you buy it, let's say, just for math figures, let's say it's making $10,000 a month,
Mhm.
and so your expenses are about 50% of that. They're about $5,000 a month. But if after a year, let's say you turn those units over, you add value to it and you lift the rents. So
Mhm.
all of a sudden at the end of the day, you're now getting $14,000 a month in revenue,
Yep.
but your expenses are still only five.
Right.
So that extra money flows to the bottom line,
Yep.
and how that impacts the value of the asset is
Mhm.
significantly different, right?
Yeah.
Like
Yeah.
just with 300 or 400 bucks a door
Yep.
times
Yep.
10 doors, you can
Yes.
get, three or four hundred
Eh,
thousand dollars more in value. with
Exactly.
very little effort, right? And so when I
Hmm.
started to see that, it was really just an eye opener for me as to how it operates. Such a different metric to look at.
Yeah, no, absolutely. Thanks for sharing that secret. That's a top secret for all of our audience here. If you're a new real estate investor, understand that Derrick Campbell has the experience. He's basically sharing something with you that you can capitalize on, right? Obviously, I wouldn't recommend getting into real estate right and getting right into multifamily unless you have a mentor or coach to support. I am a real estate coach, so you can get in touch with me. And I'm lucky to have people like, Derrick Campbell in my circle that I can, go to if I have any questions or, I can help one of my students or my mentees. Right. So, yeah, no, that's a powerful, um, concept and strategy to implement in multifamily, right? So Derrick, what is your current portfolio? What is it composed of?
So we did just buy 10 single family houses. We bought a portfolio in Saskatchewan,
Mhm.
and it was an all or nothing deal. So we had to buy them or
Right.
nothing. So
Okay. Okay.
I
Yeah.
did buy 10 houses.
Okay.
But with that was a couple multifamily. Outside of that, we have all multifamily stuff. We have 70 doors now altogether in our portfolio.
Okay.
We're looking to really densify that. We've got some opportunities where we can actually, just within the same properties, we can actually build them out. Even the single family, we can actually add additional dwelling units, garden suites, stuff like that. So we're looking at actually, without even any more acquisitions, we're looking at sort of tripling our sort of the amount of doors that we have without having to do a whole lot more work. So that's
Yeah.
our next goal, is just to take those things on.
Right.
And yeah,
That's good, man. Good. Congratulations. I think you've been total number of years that you've been in the business.
oof, 20, maybe 12. Well, I got out of it for a while when real estate, when I started buying. So I got to 84 doors by the time I was 27. Back when I was still in the business stuff, I had 84 doors. And then that was at the time when real estate, or when interest rates were really high.
Hmm.
And then when interest rates dropped and it became a convention, sort of more conventional financing, and nobody would do VTBs and stuff like
Hmm.
that.
Hmm. Hmm.
So I didn't really know how to buy anything. I had no idea. I'd never gone to a bank before. Everything I bought was vendor take back. And
Right.
so
Right.
so I didn't know what to do. So I kind of got out of real estate and more into business, because the metrics didn't make sense anymore. Like at the time, you could buy single family house for 35 to 40,000 bucks, and it would rent for 900 bucks a month. I
Right.
mean, the cash flow was enormous, right?
Yeah.
And then all of a sudden, when borrowing became so cheap, it
Yeah.
rose the price of everything.
Right.
And so it didn't make mathematical sense anymore, right? And so got out of it for a while, then jumped back into it again in COVID. So we were
Hmm.
out of real estate until 2020, and then
Right.
jumped back in after COVID because we had
Yeah.
no business. Our
Yeah.
business tanked, right?
Yeah. Yeah. That's
Yeah,
good. That's good. I'm always surprised to hear investors that jump, or start at the right time or jump back in at the right time, right? Yeah, I think it requires a certain skill and intelligence to recognize the opportunity, right? But I mean, at the end of the day, I mean, you don't need to be Einstein to figure out that if the bank is lending you money at 1.5 or 2%, right? That it's a great time to borrow, and that's what a lot of investors did during COVID.
yeah,
But now some of those same investors are in trouble, I think,
yeah,
because they borrowed at those low rates. They overextended themselves. They've got these big portfolios now, and their mortgages are starting to renew, right? So they're and some of their properties are negative cash flow. It's an unfortunate time for them, but
yeah,
it also creates opportunities for others, right?
yeah. That's right. Yeah, there are people that have been in real estate that have never even seen a real debt cycle, right? they've never seen, like there were people that thought that 2, 3, 4% interest was the norm, right? They didn't realize that that was an exceptionality and that it
Yeah,
wasn't going to last forever. They
exactly.
really they thought that they could borrow 100 to 120% against their portfolio
Yep.
and just continue to buy stuff with it, and it would just everything would just pay for itself. They didn't realize that market rates could change, and we
Yeah.
could see 10, 12% mortgage rates.
Yeah.
It's and that's unfortunate, but at the same time,
Yeah.
you have to be aware that anything can happen, right? Everybody should have a contingency plan in
Yeah.
their system.
Yeah. Yeah. No, absolutely. You got to be through a few market cycles, right? Or
Yeah,
markets to
yeah,
realize when there's an opportunity, right?
exactly.
And so I was a financial advisor for many years, and 2008 was tough for the stock market,
Yeah,
but at the same time, 2008 was a great time to invest in the stock market at the same time, right? So with stocks and having a balanced portfolio, you do not want to get out at the wrong time, which is when things are at a low, and a
yeah,
lot of people do that, right?
exactly.
And I think probably the same thing happens to a lot of real estate investors, right? They're going to
Yeah,
unload and then at the wrong time. So there's
yeah,
ways to figure out, to get back on the green. Just
yeah,
network with your people. I'm sure there's going to be a lot of experienced real estate investors that can come along and help you out and figuring things out. If not, just send me all the deals. I posted recently. I posted recently for investors to send me whatever deals you need to get rid of, and
yeah,
and I'll get Derrick, Campbell, and my friends to invest in them, right?
yeah,
And myself, of course. Okay,
yeah.
so listen, let's get to this the background picture that you've got here. It's uh, good old
Oh, this
Trudeau
guy.
there. Yeah, good
This
old
is this is my
Trudeau.
friend. Yeah, look at him, eh? Look at
Yeah.
his. We were listening to Christmas carols earlier.
listen, listen, I'm not a politics guy, but I know we had that first conversation regarding politics. And so by all means, Derrick, take it away. What are your thoughts?
Oh God, we don't have enough time. uh, I'm ultimately, see, I've seen this in real estate for a lot of years, and I'm probably guilty of it myself.
Mhm.
If you follow a simple system of real estate where you buy to the point where your tenants can service your debt, it is a idiot proof system to get rich. It is not timing the market, it is time in the market.
Right,
Okay?
right,
The problem is that it can be so idiot proof that after a while people start to think they're geniuses. Okay? And I'm as guilty of this as anyone. You start to think you have the Midas touch. I mean, we bought a building and 3 years later it had increased in value through very little work of our own by about $1 million. And so all of a sudden you start to think you can't do anything wrong, right?
right,
And
right.
and so and that level of apathy and comfort can be very, very dangerous because there are people out there that don't always have the same morals as the majority of us.
Mhm.
And to me, I look at politicians as being the lowest bottom feeders on the totem pole. They're people that want to live off the avails of others. They want to take up money out of our pocket. They want to steal and rob from us,
Yep.
and they want us to do the work while we pay the bills, right? And because we're Canadians and we love this country and we're loyal and we're patriotic and we don't like to complain, and they know that we don't riot and burn things,
Mhm,
the
mhm.
people have taken advantage of us, and to the point where most people that worked for the working a regular job,
Yeah,
they're working half their year to pay the government so they can turn around and give drugs to homeless people and and forget the retirees who can't afford medicine. There's no medicine or doctors available for them. You know,
Mhm.
we're focusing on the wrong things and spending money on the wrong things, and you know, and it's terrible. And you know, people say that it's not patriotic to pay your taxes, but we have to be smart about it, and we have to demand more from our government because we have a right to keep most of our money, right? When we work for it, when we do the things that we need to do. I've had more sleepless nights running my businesses than 99% of the population. Anybody who says that I don't deserve what I have has never done what I've done. And that's not a whine, you know, cry for me, Argentina.
Mhm.
That's just
Mhm.
life. And
Right.
so, why somebody should have the right to take our money is deadly wrong.
Yeah.
And we have every right to fight back when that happens, I think, you know.
Gotcha. Gotcha.
Yeah.
That's good. Yeah. No, I got a laugh out of talking to you regarding politics the other day. You gave me some share some secrets that I had no clue about, but regarding our good old prime minister, I'm gonna keep that to myself. But at the end of the
Yeah.
day, it's a lot of fun. All right, good
Yeah.
stuff. So what's in the future for Mr. Derrick Campbell?
Yeah. So in terms of Canada, there's a lot of people that I know that are friends of mine that have just abandoned Canada. They've left it. They see us heading towards a communist socialist utopia. I
Yeah,
am not a believer in that. I believe
yeah,
that we can turn this around.
yeah.
And so I'm still bullish on Canada. I believe
Right,
it's a
right,
good
right,
country.
right.
And so I'm definitely buying here,
Yeah,
no doubt about it.
yeah.
I'm looking to get into the business side of things. We're looking right now at purchasing a construction company because
Okay.
I think from the CMHC perspective,
Hmm.
I think new builds are the sort of the bastion of where they want us to be. And
Right,
so rather than
right,
fight
right.
it and try and retrofit older buildings, I think new construction is the way to go. And so probably in 2024 we'll take that over, and we'll
Yeah,
start into the construction phase
yeah,
of our little company.
yeah,
We do have some small multifamily we're taking down in Alberta,
right.
and then we've started a corp in the United States. And
Mhm.
so, because if all hell does break loose, I need a parachute to get out of here. Whether I have to whether I have to dig
Yeah,
or fly, I'm
yeah.
making my way out of here. So, uh,
That's good. That's good. No, no. I actually had a presentation today from a couple of real estate investors with like over 10 years experience. They had a property under contract. I think it was a 22 unit. I think it was a 22 unit.
yeah,
Anyways, yeah, they're asking for investors money, and yeah, they apply through the CMHC new construction, right? The CMHC Select
yeah,
product.
yeah,
It does take 6 months or so to get an approval or a decline.
yeah,
So, but I've heard both sides of the whole CMHC product. I've heard people that just absolutely hate it and
yeah,
hate the CMHC, and others that are obviously for it and that has worked for them. So, where do you
yeah.
stand?
I'm not a big fan. Originally, because I was buying existing product, I was dead set against it, and the main reason is particularly with the MLI,
Yeah,
is because they demanded a rent cap, and I saw that rents everywhere would outpace where and especially with CMHC because
mhm,
their numbers are usually 2 or 3 years behind with
mhm,
respect to where the marketplace really is.
right.
So if they say, you know, in Calgary, for example, a two-bedroom should rent for $1,700 a month, and
Mhm,
so that's where they cap your units at. Well,
yeah,
we're renting two bedrooms for 2,100 a month,
right,
right? So
right,
it's like
right,
when you do the math on that, does it make sense to take their money, you know?
right,
And
right.
the other side of it is that
Mhm,
is that the only thing that they're going to impose? So, you know, for example, that to get back into politics a little bit, when you saw the trucker convoy happen and they froze the bank accounts of people who had just donated money to those people, not people that were there, but just people that donated money to them, you know?
Mhm. Mhm.
And so it scared me to think that perhaps if I were to get involved with the government programs
Mhm.
and they were to sort of decide for themselves that, let's say, for example, that this cause or that cause was acceptable to spend money on and this one wasn't, and
Right.
they saw that I had, you know, something posted on my Facebook page, and next thing you know, I get a demand note from the bank saying, we're recalling your loan because, you know, we don't think you're a person of sound moral,
Mhm.
you know, of character, right?
Mhm.
And there was a time where I would have never thought that was possible with our country, but I don't think that way anymore. I don't trust what they've done to people. And
Mhm.
so being beholden to the government, and there's a lot of product now out there in the multifamily that
Mhm.
you couldn't even purchase without the MLI product
Right.
because it's at a 5 cap, and you know, or sorry, they're selling it at a 5 cap, but regular commercial money is renting at 7.5,
Right.
right? So you do the math, it doesn't make sense. The only way to buy it is through MLI, right?
Right.
And
Correct.
so
Yeah.
the fact that you're having to buy things, and in order to make it work you have to be beholden to those programs, that's not fair. That's not a free market, right? that's
Mhm.
not
Mhm.
that's not
Mhm.
the market making sense to me.
Right.
But at the same time, on the flip side, I do think that there is an opportunity to employ it, and that's why we're going into the new development.
Yeah.
Because when you build new, you're
Mhm.
sort of at the peak of where it needs to be anyway. And
Mhm.
so I think from the financing side of it, it makes a little bit more sense because new builds are so expensive that the only way you can really do it is from that perspective. And it can always be sold if I decide the government is on my case too much, I might just say goodbye and sell it.
Yeah.
And I know
Yeah.
I get top dollar for it anyway.
Yeah. Yeah. Absolutely, absolutely. I think there's definitely opportunities in land development, right?
Yeah. Yeah.
You have to know what you're doing. You have to have an experienced team, obviously.
Yeah.
But you know, all it takes, and this is for all your our new real estate investor, all it takes is just gathering up knowledge, learning, and then start talking to people like Derrick Campbell and others, and just at one point you're gonna implement what you've learned. So real estate for me, I mean, I've only been in it since 2019, but it's to me it's the promised land, if you will, right? I mean, I was a financial advisor for many years, and I did really well for my clients, averaging 7-8% returns. Obviously, when the markets were tanking, I mean, you basically were in a position to just mitigate the risk. But the same thing happens with real estate. The only difference is with real estate that there's a much bigger payout, I believe, and returns, much bigger returns as an individual real estate investor. So listen, Derrick, thank you very much for being on the show. I appreciate all your input. You share some really good secrets today. Anything else that you want to leave us with before we end the show?
Not that I can think of. No,
Okay.
no.
All right.
Yeah, if
All right.
anybody has any questions, you can reach out to me. I'm happy to help. You know, if you have new people that you work with and stuff, I have a lot of knowledge.
Mhm.
I've done lots of deals. I'm happy to help people if they need help, and I
That's
have
right.
no problem sharing whatever information that I may have. And a
Yeah.
laugh. You'll have to put up with my political rants though, because I do have them every now and again.
That's hilarious, man. Well, listen, it was a pleasure having you. And for those of you who don't know, I think Derek and I we're going to be joining forces to invest in some property in Ontario. We'll see how that goes. It's all going to end up shaping up in one form or another. But
Yeah.
yeah, hit up Derek on Facebook. He's a really nice guy, always open to helping and humble enough to answer. right? He's not one of these ego types. So thanks,
No.
Derrick. And
Thank you so much, sir.
we'll be seeing you, man.
Yeah, you betcha. Have
All
a
right.
good day.
Thank you. Thanks for listening, folks.
Okay.